Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So on Friday we've got really big collapse on the background of the payrolls report. Actually, this is not a single reason why the technical effect has been made on the gold market and actually has shown a really significant drop. But analysis of the fundamental background suggests and shows that gold market stands nowhere near the major strategical bearish reversal. So as yesterday on the Forex market report, we have taken near standing indicators, near standing data to better understand what's going on, because currently the top indicators such as the payrolls, gross domestic product, consumer price index, they are, well, let's call it as hardly or strongly adjusted. So I will not use the word manipulated, but you understand the result. So they are not representative anymore, and you have to dig some secondary indicators that not as popular, but with some approach to these indicators you could better understand what's really going on in the economy. And today we continue this practice in a gold market report. So I have taken a look at a few other indicators that has more relation to the gold market in particular, and overall we could say that currently we do not see any fundamental reasons to suggest that this is some strategic reversal in the gold market. We treat this as retracement. Actually, the pullback on the gold market has to happen much earlier when market has shown this rally. We already said that market had overbought this one as well, but a constant support from the central bank purchasing was able to, well, stay gold on the top, and some big geopolitical events, conflicts also add some fuel to demand for the safe haven assets, including gold, and that was able to stay on the surface. Right now, this situation is becoming a bit softer, and you can see that retracement has started. But this is really not some surprising moment, because markets tend to overbought in all time frames, starting from the quarterly chart. If you take a look at the 3-month chart, you will see that gold even overbought on the quarterly chart, on the monthly chart, on the weekly chart, and for some time on the daily chart as well. So from that standpoint, it's absolutely a reasonable performance. Speaking about downside extension, so you could read a report where we're talking about the longer term targets, which is particular market could reach and which are acceptable for retracement. Actually, I would say that if market even drop back to the 1865 area, it will not be something really breaking. This is just 30% pullback, guys. Although it seems far, but this is 30% pullback. But I just hurry to calm you down, is that actually we do not think that gold market should drop to the 1865. We think that actually as an ultimate level 22 even, because this is really very strong monthly report, monthly support area, monthly oversold, and actually we're in election year, so market just has not enough time to show weakness, because major events will happen very soon. It's obviously will be the gold market supportive events, and gold just has a few months to show the pullback. From that standpoint, we treat the chances on the breakout 1000 area as very low. I'm not sure that gold market even will reach 20 even area, but I just pointed because this is really very strong support. But we will go with this retracement step by step. Once again, I would like to remind you that if you consider gold to buy for investment purposes for long term, you should do nothing. You just should sit on the hands, wait for a really sweet entry levels where you could buy gold at a good price for long term. Traded on the short side or could be possible if you're a speculative trader and you're just ready for short-term trades, although they are common against the major fundamental background. If this risk is acceptable to you, you could just follow the technical setup that we have. So returning back to the technical picture, what we have on the daily chart, we've got really great collapse. Don't forget that we have also the double repo sell that works perfect on a weekly chart. Right now, market here is overextended. You can see market hits daily oversold, and very close we have daily confidence support. So we need to wait for a pullback to consider taking any short position here. At the same time, we do not want to see that pullback will be too far. So in particular speaking, we do not want to see the market above the 24 area because it will erase the whole sell-off that has happened on Friday, which is definitely will be bullish sign. Second, market action above 24 put at risk the double repo validity. So if market will move above the 24, most probable that the double repo pattern will fail. And as you know, the failure double repo is not just the canceling of the direct pattern. This is new opposite pattern, suggesting further upper continuation. That's why for the trading on the short side, you do not need to consider far standing levels. All that you need to see is just most stressing downside action and a few levels that are based on this performance. That's why if you take a look at the hourly chart, you could see that we could consider the two of them. It's 23.25, 30% level, which is also accompanied, as you could see, with this cluster of the support and has been formed recently. There's also this one. All of them will stand around 23.25 area. And possible next one is 23.50. Also, this will be probably the confluence if you take a look at the 4-hour time frame chart and use the absolute top here for building another fib level. So 23.50, it will be confluence area, and well, we will treat it as an area for stop loss order probably. So a market should not break it up to keep the perfect bearish context. So that's why this level we treat as some kind of the signal level that just conforming and showing the validity of the bearish context. So let's treat it as context remains bearish until market stands below this area. So these two levels are more or less acceptable for a pullback and a position taking. Of course, this level is much better. Now, nearest target, if you take a look at the 4 time frame chart, market has this ABCD pattern. Also, you could recognize the butterfly shape here as well, but the butterfly target stands slightly lower. It's around 22.30, while the ABCD target stands 22.50. And this target perfectly fits to daily confluence area. Well, it's $10 below the level, it's okay. So this creates agreement with this support. That's why I think that it would be better to focus if you're planning to take short position initially on the 22.50 level. So that's in general what we have in the gold market. So let's keep watching what will happen.